Hi everyone. Let's just jump into the start before I introduce our lovely speaker for today. Let me just remind you what is ideas and what we do and why we do that. So here's like a small presentation. So um, Ideas is International Data Engineering and Science Association, and it's a nonprofit. We are based in Los Angeles, California. Our mission is to bridge the gap between academia and industry. So basically, we're very excited about data science, machine learning, and blockchain. Yeah, this is our mission, bridging the gap between academia and industry. Here you can see the broad roadmap. So we started in 2016 and sorry. So we started in 2016 and for now we host a lot of conferences across the country. We had conferences in Dallas, in California, also in Harvard, in New York, in Chicago too. So recently we held a so-called conference in Los Angeles in Convention Center. Here are like pictures, those the photo gallery from past previous conferences. This is the very first one in USC, so-called conference. This is in New York, Blockchain Leadership Connect. And this one is Chicago Blockchain Leadership in 2018. And this one is Pasadena so-called conference, the very big one and very popular. And this is the recent one, which is happened to be in October 2018 so-called conference in Los Angeles Convention Center. Apart from conferences, we also do meetups through the different universities like MIT, Boston, Harvard, and all of this like meetups and conferences are targeted about blockchain, AI, data science, and machine learning. So yeah, if you want to learn more about us, we have websites. We also have LinkedIn page and Twitter. And if you missed our previous webinars or you just want to learn and like have a look at the videos from the conferences, here is a link to the QR code to the link to the YouTube channel. So let me just introduce you our wonderful guest for today's speaker, John Hargrave. He is a CEO at Media Shower, a blockchain media company. John is also an author of the book Mind Hacking, and he's also publishing an upcoming book about blockchain, which is Blockchain for Everyone. Apart from that, John is also a publisher of Bitcoin Market Journal. So John, thank you so much for doing this, for being with us today. I know you are right now connecting from Korea, and thank you for your time. So yeah, welcome.
Thank you, Dahlia. Thanks for having me, and thanks to everybody for joining. And I hope you'll ask plenty of questions as I go along. I'm going to make my presentation, and then I'll be happy to answer your questions. As Dahlia said, I am the publisher of Bitcoin Market Journal, the leading blockchain investor publication. We reach about 100,000 investors a month. And also the author of the forthcoming bestseller, Blockchain for Everyone. Very excited for you to read that. If you look at the sweep of human history, we are at the most exciting time to be alive. In Asia, they're calling it the fourth industrial revolution, but I call it the age of blockchain, the age of blockchain. And we're very early in this new age, the age of blockchain. My son, who is 17 years old and brilliant, he has built his own Bitcoin mining rig. He looked at this slide and he said, Dad, I think you're being optimistic. I think we're actually more like here. And I said to him, shut up. I'm giving the talk. And he said, yes, but I'm writing the talk for you. And I said, good point. So we compromised here. But we both agree that we're still early in this technology adoption curve. We're early in blockchain. And the question I want to pose to you is, how do we get the other 99% of the world on blockchain? How do we get them excited about using blockchain? Because that's the idea, is blockchain for everyone. Now, that was the idea, of course, behind Bitcoin. The original blockchain invention. And this was, of course, a digital money. The idea that Satoshi Nakamoto had was it was a digital peer-to-peer cash system, electronic money. So if you think about moving from paper mail to email, or you think about how we've moved from paper maps to Google Maps, that we also are going to move from paper money to digital money. This is inevitable. This will happen. And that was the dream behind Bitcoin. And we even showed that Bitcoin had real world value. So early in the Bitcoin history, an early user named Laszlo Hanwitz paid another Bitcoin user 10,000 Bitcoin to have these two pizzas delivered to his home. And today, of course, those pizzas would be worth about $34 million. And I know what you're thinking. Did he get toppings? And he did. Look at this, fully loaded. This was a historic moment because what he showed was that Bitcoin has real world value. It can be used to buy real world things. And in that sense, Laszlo is really a historical figure in the history of Bitcoin and these digital assets. But something happened, which was as the price of Bitcoin began to go up, people didn't treat it like money anymore. They now began to treat it like a stock. A stock. They began to buy Bitcoin and hold it, or hodl, in hopes that it would go up in price and they could later sell it at a profit, like a stock. And that's why I call this the new stock market, this whole the digital asset market that's being traded globally 24 hours a day. Now, I want you to think for a second about the early stock market, about the beginning of the traditional stock market, and think about how weird it must have been for early investors to understand what they were buying. So they were buying a share, a piece of a company, and what they got in return was a piece of paper, like a stock certificate. And you had to wonder, like, what gave that piece of paper its value, right? Like, why would this piece of paper be worth more in the future? And you can be sure that all of the questions that we hear playing out today around tokens and Bitcoin and altcoins, why do they have any value, played out in the early stock market. And the answer, of course, is they have value because we all agree they have value. We trust them and we agree. Trust and agreement, those are the two foundations of any value system that we have together. But a stock is really kind of like a token in a company, isn't it? So if you have a company like Samsung and you split it into component parts, thousands or millions of shares, and you offer those shares to the public, you've really essentially tokenized a company. Now imagine if we took these shares of Samsung stock and we simply recorded the ownership on the blockchain, okay? Exactly the system that we have today. We can buy and sell shares from each other, but now we're just gonna record each of those transactions on blockchain, on the public shared distributed ledger. So I sell you stock, you buy it, all recorded where we all can see it. And think about how radical this is. I call it smart stocks. It would make voting easier for shareholders. It would give us transparency so we would be able to see who owns shares in the company. And it would let us organize shareholders so we could better make our voices heard. This is inevitable. This will happen. This will happen. But anything can be tokenized, any asset with real world value. So let's say, for example, you're an American that wants to invest in real estate in Korea. Well, as a holder of Korean real estate, the owner of these buildings in Korea could simply tokenize those real estate holdings and then offer them as blockchain-based tokens. We'll call them chonse tokens that are being sold back to the American investor. So anything that has real world value can be tokenized. Let's say you have a boy band. I just gave this talk in Korea, so all my examples are Korean, but K-pop is a really big deal in Korea. And imagine if you tokenized ownership of the royalties. So the future earnings that are going to come out of your boy band's music, the future royalties can now be tokenized and offered to the public, offered to fans. And again, we now have a token, like a BTS token. That's the name of this band. If you're not from Korea, and you can buy and sell this and share it on the blockchain. And you may laugh, but I gave this talk and a young woman came up to me and she said, we're doing this right now. She had a company that is making deals with K-pop artists to tokenize their bands, and then the fans can buy tokens. And think about what that means as a fan of this band, that you're now kind of like an owner in the band. And just like when you buy stock, you see yourself as an owner of the company, you start talking about it to everybody you know, you're really going to become a promoter then of the band, because you want your asset to grow over time. You want that token to become more valuable. And for the band, they get the money in advance. So they're getting kind of future earnings today, and they can use that to reinvest in new album, new tour, etc. Anything with real world value can be tokenized. That includes fine art, precious metals, commodities, and on and on and on. I call this the new New York Stock Exchange. It's like the newer York Stock Exchange. And it will displace our traditional markets. This idea of a blockchain-based token economy. So what happened about a couple years ago was that all these entrepreneurs saw how easy it was to create tokens, and they started developing something called an ICO, an initial coin offering. It was kind of a combination of a startup where you're funding a new venture. So if you have a new blockchain project or company, you would offer these tokens. I would buy them as an investor. I'm buying it with lots of other people, so it's kind of like a crowd-funded Kickstarter project. And it's kind of like an IPO, an initial public offering, in that I'm buying these tokens or shares that can be traded. But to be clear, you're not buying shares. You don't own anything in the company. You don't have any equity in the company. What are you buying? You're buying a token. And you're hoping that that token will go up in price. And I want to share this quick YouTube video with you here, because this is kind of entertaining. So this shows basically the history of token sales from 2014 to 2018. And the dots show the size of the overall amount raised for each one of these ICOs. And what is really important to note is that blockchains have network effects. And network effects mean the more people that join a blockchain, the more valuable it becomes for everybody on that network. And what that also means is that it takes a long time for things to kind of happen. So you see, for a long time, for a couple of years, it looks like there's not much happening. But then suddenly you reach this critical mass where everything just starts to take off. We call it the rocket rule. At the beginning, you just see this rocket, a lot of smoke and noise, doesn't seem to be moving, and then you slowly start seeing it moving, and then before you know it, that rocket is out of orbit. And that is what happened in 2017. You can see it here, exploding in value, both in quantity as well as total amount raised. And this is the peak right here at about December 2017, and then continuing on throughout 2018. Something really pleasing about this, very organic. So that is ICOs in a nutshell. But then what happened over 2018 was they slowly started to decrease. And this was for two reasons. One was no one was sure if this was legal. It was kind of in a gray area. It was something new. And the question was, are they stocks? If they're stocks, then they would be treated legally like stocks. They'd be regulated under what's called securities laws. Securities, just think about them like stocks. That's the easy way to think about securities. That was the first problem. Second problem was that nobody was really sure what they were buying. What's the value in a new token? Now, I understand the value of Bitcoin, which is run by this massive global network of computers. I understand the value of Ethereum, which is this platform upon which other tokens are built. But what's the value of a brand new token without any product, without any users on its blockchain, with nothing but an idea? That's really hard to say, especially if you don't own any equity in the company, especially if you're not getting ownership in the company. So we invented this thing called the security token offering, the STO, as opposed to the ICO. And the idea behind a security token is that it will be treated like a security, like a stock, which means that it will fit under existing regulation, under our existing laws. And that is a big deal. That's a really big deal, because what that means is that now anyone can invest in these new token offerings, with some caveats that I'll give you in a second. Now, if you think back to the beginning of the stock market, that was a huge innovation because it allowed anyone to invest in companies. And that opened up a tremendous amount of capital or money into our economy. It helped businesses grow, and it really was the cause of all of our financial growth worldwide over the last 100 years. Came from public investment in the stock market. So by putting these new blockchain projects, these blockchain tokens, under the existing regulatory framework, under the existing laws, that means that we're going to open it up to more investors. And that is how we're going to get the flood of investment capital into this ecosystem to build all these exciting projects we're talking about. Supply chain projects and healthcare projects and voting projects. All these great blockchain dreams that we all have will be funded by this. There's a lot of security token platforms that are launching a lot of different security tokens. Today, Securitize has the lead. They've been cranking out a lot of these security tokens, followed by Polymath, and Harbor's just getting started. So this is the space to watch in 2019. This is really going to take off this year. So there's one problem, and the problem is that these security tokens by law are only available in the US to accredited investors. Accredited investors means the wealthy. And the dream of blockchain, the promise of blockchain, is blockchain for everyone, to democratize all of this. And so where we are today falls short of where we want to be, which is a place where anyone can invest in these new tokens, in these new security tokens. That's where we want to go. So how do we get there? So the first thing we need to do is educate investors on how this stuff works so they can make good decisions. And we have an idea that instead of investor accreditation, which really is just revolves around your wealth, that we have investor certification. And certification would basically be you take a series of training courses and then you pass a test in the same way that we issue driver's license. And the types of things that we might teach in this test is, first of all, how to think about investing in blockchain as a whole. So let's say, for example, that you have a portfolio, your 401k, or just your everyday stock portfolio. This would be kind of the plain vanilla conservative portfolio, stocks and bonds. This would be like a total stock index fund that invests you in the whole stock market, total bond index fund. And if you would put $10,000 into that 3 years ago, it'd be worth almost $14,000. Today, we've had a really great market over the last 3 years. Now, if you'd taken 10% and put it into Bitcoin, 10%, that $10,000 would have grown to almost $45,000. in 3 years. Now, you're not making a huge risk with 10%. You could certainly reduce this down to like 2%, whatever you're willing to lose, of course. But what you're doing here is actually allowing yourself to participate in this tremendous growth that we've seen in these digital assets. And even if Bitcoin had gone to zero, even if you had lost all Bitcoin, you still would have made money with this portfolio. Now, if you had diversified your blockchain holdings, so taken that 10% and split it up between the top altcoins, that $10,000 would have grown to $75,000. $75,000, a 7x return in 3 years. In 3 years. This is the slide that should give our financial planners a heart attack. Because where were they? Where were they? They don't even know how this stuff works today. And that is negligent. That is negligent. They should be advising us on how this stuff works. It shouldn't be me telling you guys about it. It should be your banker, your financial advisor, your financial planner that should be telling you about how this stuff works and how to invest in a smart way. All right, so let's think about how this might play out in real life. Here's a hardworking fellow who gets his paycheck twice a month, and out of that paycheck, he gets an automatic withdrawal, and that automatic withdrawal goes partially into stocks, again, a stock index fund, partially into bonds. And then imagine if there's like a blockchain index fund, and that blockchain index fund could automatically invest in the top altcoins and also the top security tokens. So if you contribute to like a retirement plan, just think about this in a similar way, and part of that pie is going into this new blockchain index fund. And our imaginary investor here could just set it and forget it. He doesn't have to worry about it. It's going to re-index twice a year. He doesn't have to be, kind of trying to trade in or out or time the market or learn all about these new blockchain assets. It's just going to happen for him as part of an overall investing portfolio. This is not the way most people think who get into Bitcoin and these new altcoins. They tend to think like, I'm going to put all my money into that. It's not the way to do it. Think about it as a slice of the overall pie, your alternative investments, your mad money. And that is a much safer way to get exposure to this while still enjoying the growth of your overall portfolio. So that's our dream. That's our vision. That's what we're working toward and trying to make a reality. And think about what that would do for our investor who would now be able to participate in the amazing growth of blockchain. Hooray, he would say. So we have a free investor manifesto, which is essentially our philosophy of investing in blockchain-based assets. You can get to it at bitcoinmarketjournal.com. You can sign up for our free newsletter there. And I'm John Hargrave, and thank you for your time. I'll be happy to take some questions now.
Thank you, John. That was very interesting and a lot to process. We have questions from Harshad. So how does this advantage over existing system? How does token offer advantage compared to stock certificates if they essentially represent the ownership?
The question is, how does a blockchain-based token improve upon just stocks? Is that the question?
Yeah.
So I think, as I discussed before, what they're going to be capable of doing on the blockchain, because the blockchain is code, right? So we're going to be able to create a new kind of stock. I call them smart stocks. So smart stocks will be able to be programmed to do all kinds of things. For example, it's hard to get shareholders to vote today. Right? If you if you own shares in a company, they send postcards in the mail. It's a nightmare. So we could perhaps set our voting systems, our preferences, and have them vote automatically for us. It's going to give us more transparency because it's all on the blockchain. Today, it's really hard to know who owns all the shares of a company. So the potential for having a complete shared ledger of everybody that owns a company would make it much more transparent for everyone. We could see what corporate directors are doing. We could see, how the CEO is buying and selling. We would have all that data that I think we could show in a much more clear and easy format. And finally, we'll be able to organize better. So because we're all on the blockchain together, we're going to be able to get together when shareholders are unhappy with the way the company is being run. It's going to be much easier for us to band together. That's just off the top of my head. There's going to be all kinds of innovations that are going to happen once we get these on the blockchain. And again, we can do that within our existing securities laws today, and that's what's so exciting about this. People have been waiting on the sidelines for the last year, waiting for the Securities and Exchange Commission to kind of give them the go-ahead to do this in the US. And, the idea behind blockchain is we're the decentralized community. We should be leading the way. We should be leading the way. We should be coming to the table with ideas, so at least then we have something to discuss with the SEC. We're waiting for permission. We're waiting for daddy to tell us what to do. And isn't it funny how ingrained it is deeply that the centralized authorities are going to tell us what to do? I'm simply saying, let's put ideas out there and then use those as a starting point for having good dialogue with the SEC. That's what we're doing here.
Thank you, Don. So I hope Harshad will answer your question. Oh, here's another one. So unlike existing system where shares are held in the bank's name, blockchain would allow to see ownership of each and every individual. So
yeah, was that a question or was that a statement?
That's a question, actually. So unlike existing system where shares are held in the bank's name, blockchain would allow to see ownership of each and every individual. So he's like asking if that's true.
Well, I think it depends on how we build these, but certainly it could be, right? We could have complete transparency on this, so we could see who owns every share. And I think there could be various levels of privacy built into them as well. I don't think we have any best practices today, but I do believe more transparency is a good thing. I mean, there's a lot of bad behavior that goes on because it is easy to hide the ownership in various ways of large blocks of shares. So it's easy for folks to sort of form coalitions or voting blocks and manipulate stock price and so forth. And greater transparency is a good thing for all of us, and it protects ordinary investors. And that is the charge of the Securities and Exchange Commission. That is what we're all trying to do, is make sure the game is fair for everyone.
Thank you, John. There's a lot of different questions in the question and answer box. So the first one from Wamsi, he's asking to discuss some downsides instead of upsides.
Some downsides to all of this.
Yeah.
Well, I think it's going to be difficult. I think that I think there's a lot of discussion that needs to happen to make this a reality. There's a lot of development that needs to happen. There's a lot of back and forth that needs to happen, and that's difficult. It's, any kind of change, and especially technology change that kind of meets financial change, where that regulatory environment sits, is difficult. It's a struggle. But again, we're not going to get there from just waiting on the sidelines and expecting the government to tell us what to do. We have to come out here and put forth some ideas and try to make this happen and try to move forward.
Okay, so Vamsi, hope we answered your question. There's another question from Michael. How are you addressing the SEO exchange issue?
The SEO exchange issue, the SEC exchange issue?
I'm not sure. So the question is, how are you addressing the SEO exchange issue?
I'm not sure. SEO is search engine optimization. I don't think that's what we mean. I'm not sure what's meant by an SEC. Maybe you can clarify the question.
I mean, STO, security token offering.
Oh, STO. I'm sorry. I misheard you. The STO exchange. How are we addressing the issue? What is the issue? The issue is whether we have STO exchanges? I'm sorry, I don't know what the question is. Maybe you can clarify. Somebody can clarify that one.
I'm not sure either. So, Michael, there are none coin exchanges.
There are no STO exchanges today?
Yes.
Well, there are exchanges. I mean, many of these new security tokens that we talked about before are being traded on various exchanges. I would say there's not a, dedicated STO exchange like the New York Stock Exchange yet. That's true, because this is still very new. I mean, we're still defining this as it goes along, but I mean, they're coming. That's part of the ecosystem here that's being built along with these new STOs. But what we got to do is, we got to get people investing in them, because if you don't have buyers and sellers for these tokens, and there's no liquidity and there's really no trading. So it's kind of a chicken and the egg problem. And again, our viewpoint on that is we got to educate investors. We have to explain to people how this works. How to make smart decisions, how to be aware of risk, and how to balance that risk, and how to think of this as a small portion of your overall investing portfolio.
Okay, so to continue, so Polymath has its own token, and Harvard the same. That's what Michael says.
Yeah.
Okay, so I hope the question is answered. The next question is, can you issue a security token that is backed by royalties, but not the equity? It would actually pay regularly.
I'm sorry, you broke up. Can you launch a security token that's backed by what?
So Hassan is asking, can you issue a security token that is backed by royalties, but not the equity? It will pay regularly.
It's backed by royalties? Is that what you said?
Yeah, royalties, but not the equity.
But not the what?
Am I breaking? Sorry.
It's a little hard to make you out, yeah.
So the question is, can you issue a security token that is backed by royalties, but not the equity?
Oh, but not the equity. Thank you. That helped. I believe the answer to that is yes. I'm not a securities attorney, but my understanding is that anything that has real world value could possibly be considered a security. So I believe the answer is, in theory, yes. Equity is kind of, I think, the easiest type of security token to understand, because it's so familiar to us. It's like stock, but of course you could have bonds and many other types of securities as well.
Okay, so the next question is from Sunil. Will this be trading on Dow and NASDAQ? Is this regulated?
They will not be trading on Dow and NASDAQ currently. The idea here is that it is something that falls under the existing regulation. But to my knowledge, they do not have the ability yet to support these kinds of security tokens. Because think about this, like they gotta write to the blockchain, right? Like that's a big technology step forward that is not currently supported by the traditional exchanges. I do believe NASDAQ is, working on this at this point, but to my knowledge, nothing's been launched yet.
Okay, the next question is, let me see. How secure is Bitcoin? As we had many news where Bitcoin was stolen from repositories.
Well, Bitcoin is extremely secure from an overall code perspective. So in other words, the underlying architecture behind Bitcoin has been battle tested now for 10 years. And it's solid, it's extremely secure. It is, however, a type of digital asset where you are in control of your own keys. So in other words, you are your own bank. You hold your own Bitcoin, you have responsibility over it. If you lose it, it's your fault. There's nobody to turn to. It's not owned by any central institution. I know a fellow who lives in Arkansas, and he many years ago bought some Bitcoin, had it on a hard drive, and threw out the hard drive. And he said today it would have been worth like $1 million, and not making $1 million today. So you hear these sad stories all the time. There's no way to go retrieve it. So in that sense, maybe that's what you're referring to. And also, you know, there's always people trying to, you know, somehow scheme you out of your Bitcoin, but that's just like any kind of money, right? Like there's people trying to scheme you out of your dollars as well. So you have to be careful, you have to be safe, but the underlying code is extremely secure.
So we can mine Bitcoin. Can we mine also the security tokens?
That's an interesting question. Can you mine the security tokens? To my knowledge, no, but I wouldn't rule it out. But I think the concept there is that you've got an underlying asset, and that asset has a fixed value. And so the tokens that are going to be created correspond to that asset. So for example, if your company is worth $1 million and you offer 1 million tokens, then each token is going to be worth $1. Trying to get back here. So I don't think that mining would really work very well in that context, but I think we're going to see a lot of innovation. We're going to see a lot of really interesting things come out of this, and I wouldn't rule it out.
Okay, thank you. We have a couple of questions from Hassan. So the first one is, can you make offering under Jobs Act rules that allow non-accredited investors?
Can you make offering under Jobs Act?
Yeah.
To non-accredited investors. Yeah, so this gets very complex, and I'm not a securities attorney, but there are various regulations and various exemptions under this Jobs Act, which was this piece of legislation that do allow you to essentially kind of crowdfund a company for something like up to $1 million. I think that's a Reg A+, they call it. So yeah, you can do those right now with very minimal paperwork and offer up to $1 million in funding to investors. That was a key piece of Obama's legacy was getting that legislation in place. So that's available today. But I think what we're looking for is can we expand it beyond that? Can we, $1 million for a new company, it sounds like a lot, but $1 million can go pretty fast in the technology space. So, for companies that want to raise more than $1 million, how do we make it easier for them to do that to more people through these token offerings? And again, our view is let's educate investors, maybe make an investor certification instead of investor accreditation. That's open to anybody as long as they take a test, do the training, and then take a test.
Okay, great. Another one is, can you do an ICO and STO at the same time?
Well, I'm not sure why you want to. I think the two are not exclusive, but I think it would be confusing to do the two. It's also very expensive. Like it really takes time to put these together, and a lot of money. So if you're doing two separate things, I think it would, I think it get confusing to investors as well. Like, what are they really buying? And then you got two tokens, two coins that you got to figure out how to get them both listed on exchanges. It'd be a nightmare. I wouldn't think that would be a way you want to go.
All right, another one. Can a New York company file an STO, and are certain states better than others?
Can a New York company file an STO, and are certain states better than others? Yeah, these are good questions. I would consult a good securities attorney on that. I don't know about jurisdictions. I do know that a lot of people who are launching new tokens, whether it's ICOs or STOs, in the last 6 months have been advised not to do it in the United States because it's just uncertain legally where it's going to end up. And so, you know, a lot of that money has been moving elsewhere outside the U.S. And again, what we're trying to do is say, well, let's come up with a solution that will allow United States investors to participate in these, and United States entrepreneurs to, you know, also participate in these, to raise money, to build great things, and keep the jobs in America.
Okay. I see. There is another question from Bumsy. So we pay taxes on our stock trades. If the security tokens are also traded, will there be a tax on the trade?
My understanding, I'm not a tax attorney, my understanding on taxes is you have to pay taxes, capital gains tax on any asset, a digital asset that you buy and then sell at a profit. You just have to treat it like any other asset. If you bought a painting and sold it at a profit, you would have to pay the same tax, and it's essentially treated the same way. But consult your tax attorney to be sure.
Okay. So I hope the question is answered. There's another question. Are security tokens legal today? What is the status?
So again, they are, in my understanding, they are in still a gray area, meaning that the Securities and Exchange Commission has not come out and said, yes, these security tokens are legal and free and clear. However, my understanding is that if you are complying with these regulations that are in place today, essentially you are offering a security. And so in that sense, you should be good. Again, I would consult a security token attorney to be sure, but what we're trying to do is say, look, here's a path that lets us get unstuck, because this question has really been at the root of the blockchain slowdown that we've seen in the last year, and also all these investors moving, you know, overseas, all these entrepreneurs moving overseas and taking all of this investment elsewhere. We're trying to say, look, here's an idea that is getting traction that should fit within our existing regulatory framework.
Okay, great. We have another question from Harsha. How about the speed of transaction? I have heard that the speed of transaction of blockchain is slow. Is that true? If so, how it is being addressed?
Yeah, it depends on the blockchain. So if you go make a Bitcoin transaction today, I want to say it's about half an hour to clear that transaction. So it's not instantaneous for a number of technical reasons. Excuse me. So I think it depends on how the blockchain is built. It's a little bit like saying what's the speed of a website? Well, it depends on the website, right? And the same is true of blockchain. But in theory, we should be able to do it much more quickly, in the same way that email is much, you know, faster than paper mail. We should be able to make these transactions very quickly. I wouldn't say instantly, but very quickly, and without a middleman, right? Without somebody in the middle, like a brokerage that is overseeing these. That the blockchain itself, the code, would automatically handle that transaction and record it on the shared ledger. And I think when we get these going with frameworks that everybody can share and best practices that everyone can use, I think they'll be very fast.
Great. We have a couple of people who raised their hands, so they would like to ask the questions.
Great. These are good questions. Thank you, everybody, for being engaged.
So Michael, Noel, I think you can speak now.
Hi, Michael.
Hey, how are you?
I'm doing good. How are you?
Wow. I didn't even realize that you were coming on and my camera's on. It's a good thing I had my clothes on. How are you?
You did look like you were relaxing, though, and I appreciate that.
You know what? I was relaxing, and you know, this is I do Blockchain Weekly. I do a lot of interviews, but it's you know, Saturday evening. I'm listening to what you're saying here, the ICOs, the STOs. This is really engaging stuff. This is where everyone is meeting right now.
Yeah.
And it's just so exciting to have you talking about what's going on. You know, there's a couple of things about a reg CF that you talked about.
Yeah.
And there's, you know, the issue is in doing these kinds of issues, if we're doing a Reg A plus, a Reg CF, a Reg D, any type of these things, they become securities. And the issue now is moving on to tokenizing these securities. And there's kind of a gap that's in that process that we're looking to fill. I talked a little bit about the beginning and not having an exchange for these security tokens. But as we begin to tokenize these equities and tokenize these securities, we're going to need much better exchanges. I mean, that seems to be the biggest issue as far as I can see. Yeah. And we're spinning up new companies right here in Phoenix. We've got 14 of them going into a Reg CF, but there's no real clear picture on how to go from you know, a Reg CF, which is a SEC regulated product. So we have shareholders, and we're limiting our cap table to 2,000 people. But getting from that cap table and the normal Reg CF tokens, or the Reg CF equity that you hold in a company, into the tokenization process, and then into an exchange that provides the KYC AML that's necessary to exchange these tokens. That's the big missing piece right now. Yeah.
I agree, and it's hard, right? Because the exchanges need the volume of transactions. They need enough buyers and sellers, as I said before, to really make it worth their while to come in and build these out, or to take on a new security token and so forth. If there's only a handful of people who own these tokens, you know, and they all want to hold on to it, there's not much money in it for the exchanges. So again, this is kind of a chicken and egg situation. I do think, though, as we see more and more of these STOs come online this year, the demand will be there, and you know, it's inevitable that it will be filled. You know, people will build these exchanges, and we will start to see more trading and more liquidity.
Yeah, they're building them, but like you gave 3 examples there. And the examples that you've given, they're exchanges for their own tokens that they're building, as opposed to having an open environment where you know, the exchange does the KYC AML, and we're able to exchange. That's really where we're going to start to get velocity and liquidity in this whole thing.
Yeah, for sure. That's right. That's right. So, you know, and someone asked a good question about NASDAQ, and you know, when are they going to accept these? And I think that's inevitable as well.
They're working on that now. I mean, that's not going to be that long until we start seeing tokenization of Apple and Microsoft and normal stocks that we have every day in the tokenization.
I think you're right. I think you're right, and that's exciting. I mean, that is really what will help blockchain go mainstream, because once everybody's using that technology to do this, that just gives us a tremendous amount of, again, investment that's flowing into the blockchain ecosystem that lets us, you know, build everything else in 1,000 flowers to bloom.
Let's you know, it can't happen fast enough for me, let me tell you. By the way, I want to thank you. You guys are doing some great stuff. Looks like we got another guy that's coming on for a video. I connected with you on LinkedIn. I want to invite you to one of my sessions. I do Blockchain Weekly every Wednesday at 2 o'clock. So I've invited you through LinkedIn for a session, and hopefully you'll be so kind as to consider that. Maybe we'll have you on for a session here.
Thank you, Mike. Yeah, I appreciate it. And everyone on the call can feel free to connect to me on LinkedIn. I post a lot of blockchain information there, so would love to connect. But thank you.
Thanks.
I'll follow up.
Thank you, Michael. Right now we have NASA. Yeah, I'm gonna unmute you right now. So.
Thank you. Very good.
Hi, NASA. How are you?
Yeah, good. Very informative. I have 50 more questions, but I'll save them. We actually are an ICO company looking at STO now.
Oh, great. And you guys help companies launch their ICOs?
No, we did our own ICO a year ago. We had a good time. We raised $20 million, but we're a New York, Delaware company, but we did not accept a penny from U.S. investors. We raised all up in Asia.
That's great. Congratulations.
Thank you. So now we have our blockchain product that we're releasing. It's in beta, and now we're looking at raising a second round. And one of our, people in our network, they went to a security token, and they just started raising money using security token. They filed a Reg D, and they said that there'll be security exchanges, but nothing's happened. So I'm wondering, I'm just trying to figure out, how do I figure out the smart guys so I don't get in trouble coming to the US? And what is the circumstances on which a security token is more interesting than a utility token, which I'm American, but in my colleagues, because our business is primarily in China and in Asia, they still are familiar with utility.
Yeah.
But they like the idea of being with they want the comfort of an American security.
Yeah.
And so they asked me about it, but I'm not really sure. So that's the question. And in terms of cases where that has happened.
Well, I think utility tokens are tricky. And for those who don't know, a utility token is described as something where the token operates as a kind of value within the system that helps the system kind of go, sort of like Ether is in Ethereum. And I think the challenge with that argument is that investors don't think about them like utility tokens. They think about them like stocks. I mean, we talk with investors all the time. We have meetups where we go face to face with investors. We reach 100,000 investors a month. And I'll tell you, people think about them like stocks. Even if you call it a utility token, people are buying it with the hope that that token is going to go up in price, and they're going to be able to sell it at a profit later. And that is essentially a stock. So the problem with the utility token is that it's unlikely to be regulated in a way that is any different from other securities. So from my point of view, if you're asking people to buy a utility or invest in a utility token, just call it a security, and treat it as such.
But what I've learned in the year, because in the beginning, when I wrote the white paper, the points, like you mentioned, points is what a utility token is. But you have an unlimited supply.
Yeah, that's a good way of saying it. Yep.
If you get your tokenomics and you have fixed supply, and the token or those points are worth more within that ecosystem, it could go up in value like a commodity. It becomes a commodity more than a stock. But that type of tokenomics has yet to materialize in the last year very much, because most of these projects were so new. I mean, that included us. So we met all our milestones, but everyone says, well, why didn't it go up like a rocket? I'm like, well, we have to actually build it once we get it.
Right.
And between the market crashing and the fact that it didn't happen, they were, highly disturbed by it. But now we're launching our blockchain projects, our products, and people are starting to understand the tokenomics can be real. And
yeah.
So that's where it's different. So our new thing, what I was asking about the royalty, I don't want to take all your time, but the whole idea is this guy who I know just he successfully completed an offering here. He raised a few $1 million, And he did it like a pure stock, where it's like you get value based on the equity of the company.
Right.
And I said, that's complicated because then I got reporting requirements, I got quarterly, I got to deal with GAAP, blah, 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 blah. Why don't I just pull off the part, the cash flow, and give them a piece of it? Keep it simple. And every month it goes into a lockbox and automatically, and that cash is distributed to the token holders. And it becomes like it's simplified.
It's like a dividend almost.
It's like a dividend, or it's
profit share.
Yeah, exactly. Or it's a bond that actually pays off of a certain asset, however you want to call it. But it's not a pure equity play. So then the question becomes: is that doable? Who would I go? Is that a SEC? Is that a commodities change?
I don't know exactly what that is. I mean, it's something new, like much of this. And again, I think you need to talk with a securities attorney, but I think as long as investors know what they're getting and they are getting something of real value, right, where you're being held accountable that if it's whatever, you're going to distribute all the profits each month and every, that's going to be split out equally between the tokens. Well, I think it's fair to investors as long as they understand that's what they're getting with that token ownership. I think that's the big piece that's been missing is people are just buying into tokens because they think they're going to go up in value. It was very interesting to hear that, by the way. You're a good sort of example because you raised $20 million. You got all these shareholders, token holders now,
right?
Very much like shareholders. And you just said, like, they're asking, like, what's up with the value of the token? So that is how people think. Now, if you can set expectations, that here's what you're getting with this, and then of course deliver on that in a way that's transparent and audited and ethical, then I think there's a lot of room for innovation here.
Yeah, and I would think that's more clear. But it sounds like from what you just said that this is such a new space that the rule books are still quite.
Oh yeah. Oh no, this is leading edge at this point. This is we're somewhere here.
Yeah, no, we're totally here. And the question is how do I do this in a way that don't get in trouble, so to speak.
Yeah. Well, get a good attorney. You got $20 million, so
Yeah, exactly.
That will get at least like a week of a security attorney's time.
You know how much they charge it.
Yeah.
Exactly. Okay. Thank you. I appreciate your time.
My pleasure.
Okay, Dahlia. Thank you.
Thanks. And Dahlia, we're coming up near the end of the hour, I believe, right? So can I have just a couple more minutes here?
Yeah, we still have like 2 questions unanswered. So if you would like to answer them. The first one is, how expensive is to launch SDO on average? Ballpark estimate? Yeah,
it's expensive. I mean, you just heard security attorneys are expensive. You have all of this compliance to worry about. You have the KYC, the know your customer, the AML, the anti-money laundering. You've got all kinds of marketing and promotion that you have to do. You got to have the programmers, the developers that are actually going to build this thing and make it work. You got to have hopefully a product or something to show. You got to have all your materials. Then you got to have some plan for getting this token listed on some exchange somewhere, because if people are buying a token and there's no way to buy or sell it, that's a problem. So most of the exchanges out there, unfortunately, have listing fees. So you're going to be paying them as well. So I mean, we're talking $1 million easy to launch something like this, and I would say that it could go up, higher than that, to be sure. Depending on what you're going to pay to have it listed and the complexity of it and so forth. This isn't something at this point that you can go out and just kind of do with your savings. I think that's going to change in the future. I hope that it's we'll lower the price and the barrier to entry, because I think we're going to be able to make some best practices and kind of have a more templated approach that people will be able to use for this.
Great. Thank you so much. John, I think we lost your video. So,
yeah. Oh, I don't have a video except a video. Oh, you lost my video.
Yeah.
I don't know what happened. Let's see. How's that? There we go.
Yeah, good.
Great.
The last question from Bamsi. There should be a service.
Banksy, did you say? The artist?
From no, not the artist. From Bamsi.
Okay.
So the question is, there should be a service which will validate that a certain STO or a coin is legitimate one. So is there already a service like that?
That's a great question. And a lot of what we do at Bitcoin Market Journal is we have a team of journalists and analysts that rate and review these new offerings. And we really dig into it and try to understand who's the team, is this real? And then we have something called the Blockchain Investor Scorecard, which is free to download on our site, where we go through and rate the offering on 5 different metrics. It's the team, the market, the token mechanics, the user adoption, and the 5th category, which I can't remember right now. But we do all of that really to try to do some due diligence for people, because there's so many projects out there. Again, it's so hard to know kind of what's real, and we're trying to develop some tools and best practices and getting that information out to people.
Great. That was the last question. It was a good one.
Yeah, those were some great questions today. I appreciate it. Yeah, let me just talk quickly about my new book, Blockchain for Everyone. I'm so excited about this book. I cannot wait for you guys to read it. And the book is the story of my personal journey going into blockchain over the last year. So I was kind of bored in my career. I was running a marketing agency, and I kind of felt like I'd been there, done that. I was ready to level up, and I bought Bitcoin, and I got very excited. I got bitten by the blockchain bug, as we say, and changed the whole company, the whole direction into blockchain. And it was the craziest adventure of my life that I have had over the last year. The people I've met, the places I've gone around the world, the things I've learned have been amazing. It's a book about reinvention. It's a book about reinventing ourselves. And that's very important, because we live in a time of such rapid technological change that we're not going to have the same career our entire life. Those days are over. So today we have kind of mini careers, and we have to constantly be reinventing ourselves. Lifelong learners, I call it. Got to constantly be learning and then reinventing. So on one level, the book is about that. But on the other level, it's about the reinvention of all of these societal institutions, our governments, our financial systems, our banks, and how blockchain is making that possible. So my own story, the kind of micro story, is reflective, or a mirror image of the macro story of everything that's happening in this world of blockchain. So I want you to buy it, and it is on sale at Amazon. I think you can pre-order it depending on when you're watching this video. It's either live now, or you can pre-order it today at Amazon. Go check it out, Blockchain for Everyone, and you're gonna love it. It's just a great book. It's really fun.
Great, thank you, John. So I'm pretty sure everyone's gonna read the book. I hope so. So we have a small poll at the end of this session. So John, you can participate too. That's just the 3 questions.
I would highly recommend to a friend or colleague.
Yeah.
And I heard about you through Eventbrite. So we have collaborated at one of your in-person events. I'll give you guys a shout out. You do great events. I was at the one at MIT last year. I spoke at it, and it was great. It was just really top-notch speakers, really engaged audience, very smart people, and I recommend, if you guys can make it to one of the Ideas in-person meetings, definitely check it out.
Thank you. Yeah, we, apart from just conference, we also do such online webinars, and we also have a meetups in different universities and hackathons, of course. Yeah, so John, thank you again for your time. I know you are a very busy person and a lot is going on through all your schedule. And this session was very productive, informative, and we had a really nice questions which you answered fully. So thank you again. We really appreciate your efforts and whatever you do for ideas. We really thankful for that.
Well, it's my pleasure, and thank you again to everybody who showed up on a Saturday and who asked such good questions. Thank you.
Yeah, thank you, everyone. Hope to see you again. And for those who just watching the video after the session ended, just make sure next time you will find a way and time to participate online. All right, that is the end. Thank you. Bye.
Bye.